After major central banks began to monitor easing cycle this week, markets are anticipating that the US Fed Reserve could soon follow suit. The Bank of Canada was the first G7 central bank to make the dovish policy decision. The ECB cut their refinancing rate yesterday. Besides, the Riksbank and the Swiss National Bank loosened their monetary policies. Amid this dovish campaign, the rate cut by the US Fed looks imminent. However, the US regulator has definitely not reached this turning point yet. The intrigue is yet to come, but yesterday's news about a rate cut in the Eurozone did not contain any intrigue. On the contrary, this decision was so predictable that it cannot even be called news in the full sense of the word. Moreover, the market has actually already fully worked out this decision in a market quotes in advance. So, the ECB statement to reduce the refinancing rate to 4.25% did not cause any stormy reaction. Interestingly, the GDP report published a few hours ago also did not make a serious impact on the euro trading. The Eurozone's economy grew by 0.3% in the first 3 months of 2024, data showed. So, the growth of a gross domestic product, which takes into account the cost of all goods produced and services provided, is bullish for the currency. Before the euro-dollar pair, despite the importance of the ECB event, did not show volatile trading. The price literally froze in place, forming a corridor just below the resistance level of 1.09. From the point of a technical analysis, the recent stagnation could well serve as a stage of the accumulation of trading forces. This factor is likely to revive market speculation. A breakout of the resistance of 1.09 and stabilization of the price above this level will allow the bulls to push the instrument towards 1.1. If the US non-farm payroll surprise with the growth again define expectations, the euro-dollar pair will drop below 1.0850. Further development of the bearish scenario may well direct sellers towards the support level of 1.08. Curiously, these days, the euro is trading not so much according to the rules of a technical analysis, but under the influence of the other factors. First, the Eurozone regulator raised its forecast for core and headline inflation. This means that further interest rate cuts are in doubt. The hawkish notes in the statement supported the euro, and secondly, in theory, the single European currency should have been actively declining before the release of the almost 100% predictable ECB dovish decision. The euro, on the contrary, has been steady growing all week. So, apparently, another and clearly more significant factor is exerting its influence. What do you think could be more significant than the ECB decision on the interest rates? Only the policy of the US Fed Reserve. Just today, the US Department of Labor is due to publish the official employment data, which can radically influence the policy decision of the Fed Reserve on the funds rate. The cooling labor market may force the American regulator to begin easing monetary policy, but, judging by the forecasts, the unemployment rate should remain unchanged. Besides, according to the consensus, the US private sector is expected to add only 151,000 new jobs. This figure is clearly not enough to maintain the stability of the labor market. On the other hand, the non-farm payrolls were so upbeat from December to March that the economy could afford extremely low job creation rates for another 2 to 3 months. That's the Fed Reserve may ignore the decline in the employment for now. Another thing is the growth of wages and unemployment rates. Therefore, the non-farm payrolls are sure to trigger high volatility. The market is set to follow the direction in which it should have gone yesterday. That's the market is betting on the US dollar strength. However, it's possible that the dollar index may still lose about 0.5% by the end of the week, and the US currency began trading on a Friday in a narrow corridor between 104.00 and 104.20. Wall Street, on the contrary, traded without a clear-cut dynamic and was quite volatile. The day before yesterday, the S&P 500 and Nasdaq reached new historical highs. On a Thursday, the publication of a large portion of statistics didn't have a significant impact on the sentiment. Today, market participants are focused on the official US employment data. Therefore, the S&P 500 spent the first half of the day consolidating in the range of 5,335 to 5,362. Yesterday, oil prices also became dependent on the ECB decision on the refinancing rate. Moreover, on the Brent chart, the movement to $80 per barrel coincided with the press conference of ECB President Christine Lagarde. As a result, the Brent price during this technical pullback jumped by more than 4.5% from its recent low. If Brent settles above this level at the end of the week, it may close the week with a gain of 2 to 4%. However, if the instrument closes below 80, then there is a high probability of a new bearish round in the asset. At the same time, oil prices are influenced by a variety number of factors. Yes, the growth of Brent fits well into the pattern of the clock component of the downward cycle. Its rise can be explained solely by the situation on the forex market, where the dollar is losing its position. There is also no doubt that the main catalyst of oil prices today will be the US NONFARM payrolls. That's if the US dollar receives fresh bullish impetus, then oil will begin to lose ground. However, let's not forget about the geopolitics. After all, it's also capable of inflating oil prices contrary to all forecasts. Apparently, another serious escalation between Israel and Hezbollah cannot be avoided. As a result of constant shelling, northern Israel is on fire today. Apparently, there will be a very violent confirmation in the next 2 weeks. Recently, US President Joe Biden allowed the intervention of the US military in the event of a possible military conflict between China and Taiwan, and this negatively overshadowed China's trade balance report released today. The data showed the largest trade surplus since February at $82.62 billion. As the exports grew much more than imports, this brought some relief to the Chinese economy, which is struggling for a sustainable recovery. The trade data boosted the outlook for oil demand in the world's second-largest economy. Given the alarming geopolitics and the growth in the incomes of the wealthiest people due to the rapid growth of stocks, the trend of buying gold is still going on. Moreover, gold purchases by central banks will most likely continue in the coming years. More robust buying will follow. In 2020, major central banks bought 300 tons of gold. In 2022, this figure exceeded 1,000 tons. Today, the precious metal is trading in the range of $2,353 to $4,407 per ounce. You have watched a review of global financial markets for today, June 7. Keep close tabs on the markets on the InstaForex TV channel. Feel free to leave your comments and questions. Our experts are always ready to answer your questions. Thank you for watching and see you online next week.